9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne.
And I'm Avril in Singapore. We're counting down to the open of Greater China markets. Our top stories: oil extending gains and stocks falling as efforts to end the Iran conflict remain deadlocked. War-driven inflation fears also fueling a global bond sell-off. The White House says China has agreed to spend billions on U.S. farm products, but is silent on Beijing's announcement that both sides will cut tariffs. Also ahead, China's monthly activity data due soon, expected to show sluggish consumption, highlighting an uneven economic recovery. Plus, Chinese tech in the spotlight. We speak to top executives from autonomous driving company Zelostech and robotics firm Robotphoenix, which debuts in Hong Kong this hour.
Well, Avril, it seems like we've come off this weekend here on the back foot after what we had, right? This Trump-Xi summit that has been wrapped up here. The pomp and circumstance is basically in the rearview mirror now. And we're back to sort of the reality that where we started off with, right? When it comes to oil prices, once again, we're back above 110 for Brent. The Strait of Hormuz still remains shut at this point. And once again, those inflation fears are coming back in a big way.
Yeah, that's certainly what's been driving markets in the past two sessions. I mean, no breakthrough on the reopening of the Strait. The US and Iran also seem really far apart now on any deal. So take a look at how we are faring on the Monday session after the bond market last week really was the one that showed those inflation concerns the most pronounced. You're looking at the 10-year yield in the US, I think the highest in a year, as these Fed rate cuts keep getting priced out. You're talking about rate hikes now, perhaps for the month of December. We heard from Jeffrey Gundlach, right, that there's no way that the Fed can cut rates. Brent is sitting above 110. We're also seeing stocks finally getting the memo on inflation after the S&P 500's worst session since late March, I believe it was. We're looking at futures pointing to yet further declines in a week where we're getting Nvidia earnings. The dollar continues its ascent. Take a look at how this is affecting the rest of Asia. Certainly, the AI rally's momentum flip the board has been derailed a fair bit, tracking the losses on Wall Street. And this is also coming at a time where some of these chip makers have stories of their own to contend with. You think about Samsung, for example. It's continuing to meet with the labor union today, and the expectations are high, or the worries are that there's a bit of a strike risk. Does that continue affecting supplies? Taking a look at what we're seeing in Japan as well, the declines on that market are not as bad. Some of it is earnings related, but keep in mind, this is coming against the backdrop of the March higher in these Japan yields on the 10-year. We saw that steep move on Friday, and that's continuing through almost 7-8 basis points on the 10-year today as well, at a time where these yield spikes in Japan have not been friendly for Japanese stocks. Let's take a look at how inflation has been playing out in China. Of course, this is interesting as a market that's seeing the 10-year yield still. We're lower a little bit compared to where we were pre-Iran war. And this is, of course, coming against the backdrop of those worries. Is reflation really coming through in China? Dollar China, you're sitting above the 6-8 handle as well. We're watching some of those chip makers as well in the session, Yvonne.
Yeah, the stock seems to fall about 4% on Friday here. I think it's one of the biggest moves we've seen since March. So certainly that is setting some tail risks here when it comes to the chip sector. You're already seeing Taiwan is lower here this morning. And again, as you mentioned, traders are now pricing in that rate hike from the Fed for March of next year. That's basically is somewhat almost guaranteed. So it's interesting enough what people are pricing in, the changing of these kind of inflation expectations. But we also did get some news, as we just mentioned here, the White House, when it comes to trade. Now, China, they say, has agreed to purchase at least $17 billion of agricultural products from the U.S. each year through to 2028. but hasn't commented yet on Beijing's assertion that both countries will cut tariffs following last week's Trump-Xi summit. Let's bring in our chief North Asia correspondent, Stephen Engel. He's still in the Chinese capital for us. Steve, we're getting a little bit more meat on the bones on what really was, I guess, agreed upon in Beijing last week. Yeah. Tell us a bit more about some of the targets and some of the numbers here in terms of what commitments we've heard from the Chinese so far.
Well, it's definitely good news for U.S. farmers because, again, this is the planting season right now, in the middle of it for soybean farmers. And last year there was so much uncertainty because we hit the harvest in September, October last year, and there were no sizable orders from the Chinese. It took that meeting in Busan to kind of get the ball across the line on orders, and we did get something from the Chinese, a commitment back then. So this, in the middle of the soybean purchasing or planting season, is good news for those farmers. But that $17 billion commitment from the Chinese, according to the White House readout, does not include the commitments to soybeans. So that's even better sign because if you go back to 2024, China essentially bought about $24 billion worth of agricultural products, including half of that was soybeans, $12 billion. Last year was a very different story. Total agricultural purchases by China from the United States was just $8.3 billion because of all the trade frictions and also holding back on buying the soybeans. The Chinese went to other markets like Brazil and elsewhere. So again, that's still a lever that China could use if the trade friction and the tariffs ramp up. China found those levers in rare earths and they found it in soybeans and other agricultural purchases. But right now, following the fairly cordial summit between Donald Trump and Xi Jinping, the Chinese are committing to those purchases like they did in the first trade war. But then again, they did not fulfill the full order of soybeans for one because of COVID. So, again, things can change over the course of the year. But again, at least they're off on the right foot in the middle of the planting season right now for soybeans.
Stephen, as you alluded to, I think some of these purchases have fallen short in the past of what's been committed. But how do we also factor in the economic realities that we're seeing on the ground in China?
Well, the Chinese economy for sure is sluggish right now, and they need to find ways to boost domestic consumption. It's interesting to hear the different narratives coming from social media in China about the summit. Again, a lot of the social media is censored. But again, I think there's still a hesitancy in Chinese households to spend. But again, purchasing from the United States on the agricultural front, which they need, is important. But again, the big uncertainty really is the overhang of the fuel price shock that the rest of the world is facing. China hasn't necessarily seen the sharp rise in prices at the pump right now because of their strategic reserves that they have. But again, the longer the war goes on, the longer the uncertainty there will be as well in finding some sort of mutual agreement on the opening up of the Strait of Hormuz between China and the United States. There was not necessarily a lot of progress on that front other than both sides would like to see. Well, China did press the U.S. side to find a way to open the Straits of Hormuz. We do not know how Xi Jinping responded directly, however, to the White House's push to get China to use its diplomatic influence on Tehran on that front.
Steve, thank you for getting us the latest. Chief North Asia correspondent Stephen Engel. We'll have more with him later. In the meantime, take a look at how Samsung stock is faring. Of course, we've been watching how the leadership of the company has been engaging with the labor union, and the labor union chief says that they will sincerely engage in talks with management. The worries, of course, about the risk of a strike on a company that's really been propelling the stock gauge. The Kospi, of course, along with the likes of SK Hynix, does the supply disruption fears come a bit off the fore now, given what we're seeing in perhaps some signs of progress between the two sides? Yvonne?
Yeah, at least that part of the equation is looking a little bit better for Samsung as well. But against this backdrop still of higher yields, inflation fears, and oil coming back in a big way as well. For more, let's bring in our markets producer, Anthony Stevens. He's with me here right now on set. We kept asking, at what point is this higher yield environment going to derail this equity rally? Are we finally seeing this now?
Yeah, we saw that on Friday, right, when Trump commented that the Hormuz does not need to be open, right? That was a sea change in sentiment. People started to price that this is going to be an ongoing problem, right? And we entered this nachos trade, right? The no chance this trade is going to get open. And this opened the gateway to unhinged kind of move in yields across the entire world. And it's important to note that Asia's led that move, right? So JGBs and KTBs are getting quite untethered here on the way up. And it's the velocity of that move that is starting to spook equity investors, right? One thing I really want to focus on is equity markets now are very dependent on retail sentiment, right? Korean retail, it's a big number. They bought $50 billion Korean domestic versus foreign selling. So the Korean locals are very long, and when they start to see KTBs ratchet higher every year, the hurdle rate to future gains is much higher.
Anthony, the AI rally has kind of left some of these other markets out in the cold. I wonder what's your read on Chinese markets, because there was a period of time where in the depths of the market selling during the war, it was seen as a bit of a haven. Does that come to the fore now, given these persistent worries about the Strait?
So it's interesting. Chinese equity markets are starting to trend in a very bifurcated manner, right? You have the Chinext that is doing really quite well. China's domestic chip ecosystem that had a little bit of a wobble last week, but that seems to be very much the focus, and it's having very decent earnings. On the other hand, you have the China internet stocks. The K-Web, for example, is indicating sharply lower again today. Chinese internet companies are just not monetizing AI in the same way, and they do not have the same kind of blue sky earnings expectations that US hyperscalers enjoy. So China is quite a complex little situation. As you alluded to much earlier, Chinese yields, though, are much more relaxed. So China does not have that one concern.
Anthony, thank you. Anthony Stevens there, our Bloomberg Markets producer here on what's really driving these markets here. Of course, we're just about 20 minutes away from, of course, new home price data out of China, and then that data dump at the top of the hour. Of course, we're counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. This is the China Show. All right, we're taking a look at when it comes to Asian markets here this morning. Futures are flat in China right now, but you are extending this sell-off when it comes to North Asia equity markets here, given just the yield pickup we've seen across bond markets globally. When you're talking about, Treasuries continuing on the sell-off here this morning on these oil and inflation fears as well. We're also pushing away or moving away the narrative from the Trump-Xi summit back to the Iran war now, and that's why you're seeing Brent prices back to 110. So certainly there's plenty of headwinds here this morning, but we're still expecting to see what this China data is going to look like as well, which continues to show supply is pretty strong, but weakness still in the demand picture as well. So that's in store for us. And of course, to wrap up what we really got out of this presidential summit, let's go to San Diego, and we're joined by AmCham China chairman James Zimmerman. Also back with us, I want to bring in Steve, our chief North Asia correspondent. He's still in Beijing. James, I'll start with you. It seems like it was plenty of pageantry, maybe low-end deliverables, which was sort of expected, kind of even leading into this summit. But what do you think? Would you call this summit a success?
I think it's the most important thing is that the two business leaders got together and had a dialogue and they spoke. The deliverables are something I think that you're going to be seeing over the next few weeks or so. And we can't expect that there will be any kind of a grand bargain or any breakthroughs. But the fact that both sides are committed to stabilizing the relationship sends a very strong message, a signal to the business community, and that gives us a sense of optimism. And that's important. So hopefully over the course of the year, through meetings at APEC and G20 and the state visit later this year, the two leaders can continue to meet and work through a number of the complexities in the relationship, which is something that's important for business. It brings a level of predictability, clarity in the relationship, as well as puts in the guardrails we need to make sure we don't go back to a situation where there's trade wars and tensions and other escalations.
Right. Hey, James, Steve here. Let me jump in and ask you, because I think one of the more important aspects of this detente, if you will, is this suggestion of a board of trade and a board of investment. Because, again, the tariff barrage last year sort of put blanket tariffs across many different products. In fact, all products that were going to be sent from China to the United States. How important is it to get the negotiations going to find the areas and the thresholds and the sectors that are not going to be tariffed at, say, for example, areas that have more national security concern?
I think with the Board of Trade, the most important thing is that it's a platform. It's a platform for the two sides to talk. It's not at the level of, say, the Joint Commission on Commerce and Trade from years ago, but it's an opportunity for both sides to talk through some of the issues. I think one of the challenging things is we are actually waiting for more details and clarity on the processes and how this will all work. But I think some of the challenges of the Board of Trade is that there's going to be decisions, and those decisions may be challenged on who gets to trade and who does not. So it does create a little bit of uncertainty for the business community, but overall, we're very much optimistic that the two sides are indeed talking. And on the trade side, one of the issues we also see is also making sure that services are included. So trade and services are just as important as working through the issues on trade, in goods. With the Board of Investment, that's another area that we can be finding some common ground where we allow Chinese investment into the U.S. in non-sensitive areas, and also find ways that we can increase maybe market access for U.S. companies in China. So both of these boards, are a step in the right direction to allow us to try to work through some of the issues and build, a solid trade relationship that will benefit both the first and second largest economies in the world, but also the global trade system as well.
And James, it's interesting, right? I think she also told a lot of these American CEOs that were traveling with the president about, China's door to the outside world will only open wider. Without offering too many specifics, do you think this Board of Trade and Board of Investment just institutionalizing how this could actually lead to more maybe two-way trade? I mean, do you think that alleviates a lot of the concerns that a lot of maybe businesses and your members have talked about, the regulatory concerns, the supply chain, export risks, and the like?
Yes, absolutely. I mean, you used the right word, institutionalizing this. It creates a platform, a forum for the two sides to talk, and dialogue matters, diplomacy matters. And it's very, very important that we do have these platforms, that we do institutionalize these conversations. That's what business needs. That's what business wants. And again, we want clarity, predictability, and the guardrails in place. So these, both of these boards are indeed a step in the right direction.
Hey, James, there's always the risk that things can kind of go pear-shaped in this relationship. We're coming up to midterm elections. There might be some more anti-China rhetoric in the United States. Obviously, China in the past, because of conditions or situations outside their control, whether it was COVID or the tariff barrage, they did not fulfill necessarily their commitments on soybeans. It's one thing to pledge. It's another thing to fulfill that, agreement. So are you still sort of, tentatively optimistic, or is there a hint of caution there for you?
I'm more cautiously optimistic in the sense that the midterm elections, we do not believe will be about China. They're going to be about a lot of other issues. There'll be issues such as the U.S. economy, gas prices, affordability, healthcare. There's going to be a lot of other issues besides China on the agenda for the midterms. But the business community is prepared for a sense of, some China bashing that may take place. But the business community also needs to be prepared to get the word out, on the ground in the U.S. and in the context of the conversation over the midterms or the 2028 election, and that the relationship between the U.S. and China is very, very important for the economy, not just the U.S. and Chinese economy, but also the world economy. So there are indeed going to be political issues coming up with the election. We're hopeful that China is not going to be the focus of attention, but those are things that the business community is prepared to, advocate on to ensure that we go in the right direction.
Hey, James, were you disappointed at all that the large contingent of top U.S. executives that came, whether it was Jensen Huang, Elon Musk, and the others, Tim Cook, they did not necessarily, at least in the immediate aftermath, announce big deals for the H200 AI accelerator or any kind of movement on, robo-taxis for Tesla. We did get sort of a watered-down order for Boeing jets. Beef is going to be back on the table of Chinese households, potentially. Was it kind of underwhelming to you as far as the deal flow?
No, not necessarily, because this is an initial step. I think all of the businesses represented in that delegation, have much to offer to China. And they, represent the best of America. And many of those companies are actually very much engaged with the American Chamber of Commerce in China, as well as actually having some of our companies that are on our board of governors. But I mean, they're not disappointed. They feel that this is just a long-term process. That if there's issues that they need to work with the Chinese, I think the messaging, coming from both of our leaders, is that this relationship and the relationship between our companies and China is critically important. We have a lot to offer, and it's a process of moving forward with the dialogue. And that may take, a lot of this is going to be taking place after the summit. So in between now and the next touch point between the two leaders, we'll see what kind of progress that we're making. And hopefully we'll have, it won't be underwhelming, it will be overwhelming. So we'll see what happens as we proceed through the year.
James, we have to leave it there, but thank you. James Zimmerman there, chairman of AmCham China, joining us from San Diego. Also, our thanks to Steve, our chief Malaysia correspondent, of course, in Beijing for us. I just want to check when it comes to where bond markets are right now. We're focusing on the Treasury market as well. When it comes to the 30-year yield, we are now at the highest level since 2023. So we're talking about a 5.15 handle now for the long end of the curve. JGBs are also moving in tandem. In fact, that 30-year JGB yield surging 20 basis points. Close to that here to 4.2% right now. We'll have plenty more ahead. This is Bloomberg.
The story today is really about the march higher in yields against the backdrop of concerns about inflation. Of course, we're watching data in China coming out for the month of April. But against this backdrop, really how inflation concerns have eroded the optimism surrounding stocks. And it looks like on the Greater China markets, they're no exception for today. You're watching The China Show. The Open is next. This is Bloomberg. Now, Yeah, the story we're tracking today really is against the backdrop of there not being a breakthrough on the reopening of the strait, and the bond markets have certainly been bearing the brunt of these concerns on treasuries. The 30-year yield, of course, we've been seeing how those concerns have more or less been playing out on the long end. You're rising now on the 30-year yield to the highest since 2023, and Japan also kind of moving in lockstep with the pressure in global debt markets. China a bit of an exception to the rule amid all this, but the 30-year in Japan also the highest since its debut. That was way back when in 1999, Yvonne. And, we're watching really also, given how the Takaichi administration seems to be announcing extra budget, given the Middle East shock, how that also will play out in the way in which bond investors digest yet more supply. Yvonne?
Yeah, when you're talking about more fiscal strains and the like for these governments as they deal with this energy crisis, and certainly that does add to more fuel to this bond sell-off, right? And, at what point is this really going to lead to more pain for equity markets? We're already seeing that across Korea, across Taiwan, across Japan. Of course, these were the darling sort of markets, given the whole AI hardware sort of trade. And now we're seeing that being roiled here today, especially in Korea. At least we got some slightly more positive news when it comes to Samsung and where they are when it comes to negotiations with the labor union. But then again, there still is that risk of some sort of strike with that company. So there you go. Onshore markets are doing a little bit better against the tide. You take a look at when it comes to CSI 300. We are lower by about 0.4%. Shenzhen is also falling just moderately here this morning. We're watching, of course, the bond market in China is a little bit more resilient to, of course, some of the external bond market fears that we're seeing when it comes to oil, when it comes to inflation as of now. But look at Shanghai crude. We are elevated once again. We're up 6% and really following that move with Brent and WTI. As we talked about, Brent is back to 110 as we get closer to, of course, what happens with the Strait of Hormuz, right? We're back to that sort of reality there as well. Chips there are seeing a little bit of sell-off here when it comes to Cambricon Tech, where we're lower by about a third of 1%, but CATL is lower by 1%. You take a look at when it comes to the Hong Kong dashboard. Of course, we're just moments away. We just got that new home price data just came through here. We'll get that to you a bit, but data dump is also coming through here. HSBC, there you go. We're seeing a sell-off here. Baba down some 2%, Tencent, now that we got through their earnings as well. It seems like still the internet platforms are struggling here this morning. And dollar China, we're back above that 681 handle. So that dollar is really kind of sticking its neck out here this morning across Asia, even for the renminbi that has been resilient and strong up until recently. So there you go. That's what we're seeing so far. We're watching different stocks in terms of the agricultural sector, the farming sector, just given this number that came through here from that U.S. White House readout about how many agricultural purchases. They talked about 17 billion that's in stores. So certainly we haven't seen that right now in terms of the reaction from some of these agri stocks, but they are slightly lower here this morning. Healthcare stocks are also in focus here today in China. Of course, this has also been a very hot sector given the fact that there's this Ebola outbreak, and WHO over the weekend did declare it as a health emergency. So you are seeing the likes of Alibaba Health, JD Health are lower this morning. And we have to talk about this debut, Robotphoenix. And we are seeing what has been, there you go, a very punchy start of trade here. First day of listing here. They talk, they of course are a robotics company, which has been doing very well in this market. But the retail portion, get this, take a look at that, according to reports, was 14,800 times oversubscribed. So plenty of interest from the retail side of this for this stock. But Avril, you're checking this home price data. What do we got?
Yeah, for the month of April, we're seeing a slower decline on both the new and used home prices. So for new homes, a decline of about 0.19% on month, 0.23% if you're looking at used home prices. Of course, the housing sector slowdown has certainly been front and center amid the Chinese economic wobbles that we've seen of late, Yvonne.
Yeah, and I think it goes with the sort of trend that we're starting to see, that maybe things are starting to bottom out. Of course, this is really a first-tier city sort of story for now. When you talk about cities like Shanghai, we talk about cities like Shenzhen that seem to be driving some of the recovery in this market. So, there's a big question of whether this actually broadens out to second to third tier cities as well. But certainly that has been the big debate among a lot of these property analysts out there. Is there really now a floor in place for prices?
Yeah, in the meantime, let's get to the annual BNP Paribas Global EV and Mobility Conference that begins in Hong Kong. Among those attending, Zelostech, a Chinese robo-van operator that claims the world's largest fleet with more than 25,000 vehicles, and their backers include Baba, CDH, Baidu, Blue Lake Capital, Baidu as well. Joining us now from the event, Zelostech co-founder and CEO of Global Business, Zhang joins us. So, Sean, it's interesting because we were getting home price data. We've been talking about first versus second tier cities. I'm interested in, when you look at your business, I think the fleet is 25,000. With regards to scale on the mainland, what are the challenges? What are the plans there going forward? How are you looking at the dispersion among cities?
Well, in China, we've been growing rapidly in the past few years. In 2023, we sold about 200 units, 2024, 2,000, and 2025, 20,000. This year, we have a very aggressive plan of going, I think, close to 80,000 if possible. Challenges are there, of course, because for autonomous driving, eventually it's a safety and efficiency that we care the most. When we have more vehicles running on the road, we'll be able to see more corner cases in different climate scenarios, different operating scenarios, et cetera, et cetera. So we'll be continuously invest and dig deeper into the technology itself. Meanwhile, we'll try our best to provide more products for our customers to meet their requirements in different fields.
For these different fields
that's
and
pretty much the plan
markets,
for this year.
Right. You also have a presence in the Middle East, correct me if I'm wrong, in the UAE. I mean, how has the war affected some of these plans, if at all?
Well, it's sad to say that the regional conflict definitely brought some challenges to our business and to the local people. It's glad that our vehicle, even in crisis like this, is able to help local people in delivering water and food, like instant noodle, those stuff, so to keep the city running. So when the conflict comes to a more stable status, we see business start growing really fast. So we had a problem that how to ship our vehicles all the way from the factories from China to UAE and other Gulf countries. But today, with the help of our partners, our local partners, we found a valley route that's routing through Oman, some parts of Oman. Then through land transportation, we'll be able to deliver our vehicles to our customers in UAE and other countries in the region. So it's good and bad. Go ahead.
Yeah. It seems to be a fluid situation. I wanted to get your take on the business is headquartered in Singapore. Since you guys are a Chinese company, can you tell us a bit about the rationale of the business case for being in Singapore, and what does this mean for your Southeast Asia expansions?
Well, that's a very good question. The technology and supply chain and the market, the major of our market is in China. I don't deny that. But for Singapore, it's a more open global city and country, especially towards other Asia countries and Southeast Asia. Our current strategy is to expand into Southeast Asia and Middle East. That's our focus for now. For that strategy, Singapore is a very good start point as a demo and a window to showcase our technology, our product to all the investors and customers around the world, especially in Southeast Asia and the Middle East. So that's why for our first step of going out of China, we picked Singapore as our global headquarters. Started doing that since 2023.
And can you tell us, how's the competition there? There's a lot of, I guess you could say, more of the legacy sort of names in Southeast Asia. Grab, for example. They're also going into this whole autonomous vehicle sort of route here right now. Who is your competition right now in this space, and how do you view those dynamics in Southeast Asia?
Very good question. Well, in Singapore, we don't have so much of a competition at this moment. The companies that you mentioned, like Grab, other company names, they're actually collaborators of us. We actually signed a strategic partnership with Grab providing technology and products for Grab to deliver stuff to their end customers. In Singapore today, we were the first one who got a commercial license plate to legally operate in Singapore. And I believe as of now, we are the only robo-van company that's going commercial in Singapore. We have customers across the whole country like DHL, Singapore Post, FairPrice, which is like their biggest chain of supermarkets in Singapore. And they're very good customers, supporting us not just by placing orders, but also helping us in developing new products that better fits their needs, and also working together on legislation and regulation with the government.
Okay, well, it's interesting too, Sean. Maybe can you tell us a bit more? There's been reports, some chatter that you guys are looking at an IPO sometime soon. Can you give us any sort of update on that?
Well, everything you've heard most likely is unofficial. I mean, at this stage, we're expanding vastly and really in a very fast growth stage. So we're definitely open to all the ways of collecting more funds from all the sources, including IPO. But for the business and the R&D, our plan is very, very, very clear and very straightforward. That we need more money to develop the better technology. We need more money to develop more products, better products for our customers, and we're open to all the funding sources.
You spoke earlier about Singapore being a way to sort of showcase what is possible with the business. What are the other Southeast Asia markets that you're really optimistic or banking on at this stage?
Well, for now, Malaysia and Thailand are the two countries we're going to get in and expand in the next phase. We have found partners, really strong partners, who has scenarios, who has a good ambition of getting into this market with us together in those two countries. Other countries like Vietnam and Australia, we're also having some good opportunities over there, but they're still on the early stage. So I say next phase for Zelos to expand in Southeast Asia, Malaysia, Thailand is definitely the top two countries that we're going to get in really, really soon.
John, it's great to have you. Sean Zhang there, co-founder, COO, and CEO of Global Business at Zelostech, joining us there from the BNP conference. Of course, you can rewatch that on the Bloomberg Video Hub. Subscribers can explore live streaming, news, and interviews, all our Bloomberg TV shows, documentaries, reporter analysis, and more. Check it out at bloomberg.com/videos.
Right, we're taking a look at the South Korean benchmark, erasing a lot of those earlier gains. And I think some of that headway between Samsung and the labor union, or at least positive vibes based on some of these headlines we're getting, is helping to put to bed a bit some of those concerns about the strike risk, supply disruption risk. You're seeing the chip makers gaining. And of course, let's get to Seoul now. Our Asia equities reporter, Yu-kyung Lee, joins us. Yu-kyung, the head of the union saying a few minutes back that they plan to sincerely engage in talks with management. I mean, what do we know at this stage?
Yeah, what a morning for Korean stock market watchers. So earlier today, we saw the Kospi starting at a sharp weakness, bringing the index to the correction level briefly, and that was driven by the two chip makers, Samsung Electronics and SK Hynix. Samsung erased earlier losses of more than 3% to now gain more than 3%. That comes as the investor watched the status of the wage negotiation between Samsung management management and the labor union, which resumed this morning. And now the latest development we have today about Samsung strike is that President Lee Jae-myung made his first comments about the Samsung strike. What he said on his X account was that management rights should be respected just as much as the labor rights. So as this comments come from the former labor lawyer, Korean President Lee Jae-myung, Samsung has been raising earlier losses to a gain more than 3%. That has helped Kospi to pare earlier steep losses to trade nearly almost flat. Actually, it's in the green now.
Yeah, it's interesting, right? Just what we've heard in the last couple of minutes as well. Against that backdrop, though, we're still dealing with the semiconductor trade. It seems like, we're seeing a bit of a sell-off here. Yields are picking up. This whole sort of inflation fears are really kind of roiling over all the semiconductor space here. What is the outlook for Samsung in terms of the stock moving forward?
Yeah, absolutely. Higher yields are threatening this Asia's artificial intelligence trade, and South Korea is one of the market that investors are closely watching for the possibility of potential interest rate hikes. So what we're seeing today is against this negative macro background, all these background noise that is not very favorable to the risk appetite, to this high flying stocks such as the semiconductors names such as Samsung and SK Hynix. Both of the stocks has more than doubled so far this year. So I think the investor will be closely watching the yields as well as the Nvidia earning due later this week for the direction of the Samsung and SK Hynix share prices going forward.
Yu-kyung, this is a market that's gotten to these levels from the buying thanks to the retail army. Foreigners are still selling into this market. I mean, what are the signals you're gleaning from this?
Yeah, absolutely. So I think last week we kind of saw this tug of war between retail investors and foreign investors. Foreign investors they reduced record 13 billion amount of Korean equities last week alone, and that's like the weekly record that we've seen in data dating back to before 2000. And on the other hand, retail investors have been buying. What we see from the foreign investors now, that's not necessarily reducing significantly their position of the South Korean stock market, but rather a profit taking of the two heavyweight chip makers, Samsung Electronics and SK Hynix, which heavy lifted much of the cost base, almost 80% rally. So a lot of the investors and analysts I've spoken to, they said this is part of the healthy correction pullback after this sudden rise, especially if you look at how many days it took for the Kospi to go to 8,000 milestone from 7,000. It only took 7 days. And if you look at the past 1.5 months, the index rose more than 60%, and much of that gain has come from Samsung Electronics and SK Hynix. So I think a lot of the foreign investors are now dealing with this massive growth of their Samsung and SK Hynix position in their portfolio, and now it looks like the good time for them to take profit. But after some of the consolidation and possible pullback, a lot of investors are expecting Kospi to resume its gains.
Yeah, I mean, even if there's a 20% bear market here, we're still talking about back to levels since April. So I mean, it's been a stellar rally, to say the least. Yo-Kyung, thank you, our Asia equities reporter there, Yo-Kyung Lee, joining us with the latest when it comes to Samsung. Let's turn to another company that we've been focusing on for a while now. China Evergrande and its liquidators head to court today for the opening of their lawsuit against PwC in a case set to test the scope of claims against auditors of insolvent companies. Let's bring in our Bloomberg reporter, Trista Shingli-Luo. She joins me here. So this case really centers on PwC's auditing work on Evergrande. What are we watching out for?
So this is actually the first public hearing between PwC and Evergrande liquidator. And it comes more than 2 years after the liquidator filed a lawsuit against PwC. And as you mentioned earlier, today's hearing focused on its auditing work of Evergrande, which is quite a symbol of Chinese property crisis. Evergrande defaulted back in 2021. And today's hearing is really interesting because early on, liquidator initially only took legal action against PwC's China and Hong Kong affiliate, but they later on to add PwC International to the lawsuit. So PwC International is the umbrella level of its units worldwide. And in today's hearing, PwC International will try to strike down liquidators' claim against them. So I think that's quite interesting to watch because there are not many, that kind of cases that we bring into the international level of an audit firm.
Trista, to what extent does this case matter beyond Evergrande?
Yeah, as I mentioned, it's a kind of, precedent-setting fight because there are many cases we'll bring into the international level in Hong Kong. And if the court, allow the liquidator to take the action against PwC International, it could expand the accountability to the global audit network. So that's why I think one of the reasons why all the, financial service industry people here in Hong Kong are closely watching this case. And another thing is any financial ruling against PwC will add to the previous regulatory pressure the firm already faced. Last month, PwC's Hong Kong unit actually paid 1.3 billion Hong Kong dollar to settle Hong Kong regulators' investigation into its role in Evergrande. And last but not least, it's also crucial for liquidators' years-long effort trying to claw back at least part of creditors' investment. Liquidator previously said Evergrande's debt burden actually reached 350 billion Hong Kong dollars. So anything they can claw back from PwC will be crucial.
Trista, thank you so much. Bloomberg reporter Trista Xin in Hong Kong with the latest on that for us. Still to come, we crunch China's April activity numbers with HSBC Global Investment Research. We'll also hear from BNP Paribas APAC Deputy Head of Global Markets on how clients are reacting to a volatile investment environment. Plus, our exclusive interview with the Robotphoenix chairman as the company makes its Hong Kong trading debut.
Well, we're seeing the deepening of the sell-off here when it comes to global bond markets here today. You are continuing to watch. Take a look at the JGB 30-year yield. We're at 16 basis points here right now to a 420 handle. I think it's the highest we've seen since 1999. The Treasury market, the 30-year, is also punching a 515. That's the highest we've seen since 2023. So certainly the oil fears, the inflation fears are back. I think after we saw those April numbers coming through from the U.S., and I think with Trump mentioning last week that, he doesn't really care too much about the Strait of Hormuz reopening. That certainly did roil the markets here, and that's why you're seeing equity markets are starting to see a bit of pain. Hang Seng is lower by about 1%. We're seeing pretty flat, resilient when it comes to the onshore markets here today, but certainly we're expected that data dump in just moments away. You're seeing those live pictures out of the Bureau of Statistics here as well. We're expecting to see when it comes to industrial production, probably stronger based on underpinned by exports, but when it comes to retail sales, could be still another sore point there. That data dump coming up next.
Welcome back. We're counting down to China's release of activity data for the month of April. You're looking at live pictures there out of the Bureau. And of course, the expectation is that we see growth for factory activity, far outpacing that of consumption perhaps. But of course, it's all coming on a day where if you take a look at how tech is faring, you're seeing that dispersion continuing to trickle through. It's really the chip stocks that are helping to offset the declines. If you're looking at the Hang Seng Tech Gauge, the internet names are the ones bearing the brunt of most of that. Of course, this is coming a day where most of Asia tech is down, save for some of these pockets of optimism out of South Korea. Yvonne?
Yeah, Samsung certainly that they seem to be coming up with some progress in these negotiations to maybe possibly avert a strike. That certainly we're still waiting for more details that are coming through from that meeting. But here you go. That activity data for China for April has just been released. I'm looking at the retail sales number. 0.2%. So that is quite a sizable miss from the median estimates here right now. Economists were expecting a 2% sort of print. Industrial production also was short of expectations, 4.1%. And also seeing a slowdown there from the previous month. When it comes to fixed asset investments, it's a negative print now we're talking about of negative 1.6%. So quite a miss on seems like in multiple fronts here today. You take a look at when it comes to property investment, that continues to be double-digit contraction, 13.7%, which was also a miss there. And property sales, when it comes to residential property sales here today, also in negative territory. So overall, it seems like this is a pretty soft set of numbers here. Let's bring in Jing Liu, Greater China Chief Economist at HSBC Global Investment Research, to walk us through some of these numbers. At first glance, your take, Jing Liu.
Well, it's surprising on the downside, to be honest, on all the prints. But we need to take things with context. Basically, with the Middle East conflict going on, that probably affect the economies in Asia. In China, probably more resilient than others, but no exception in terms of taking the hit.
0.2% for retail sales. I'm trying to see when the last time we saw a number of so small. What does that tell you about the domestic side of things and the demand picture right now?
I think clearly everyone is talking about the K-shaped recovery in the sense that the consumption is still on the soft side. And over the past several years, it's pretty clear Chinese authorities don't believe in handout of money. They probably are looking for more sustainable recovery, which will rely on the overall pickup of the economic activities. So I think right now something is still in the brew. For example, the President Trump visit. Basically, the Ministry of Commerce came out and say that it's possible both sides might reduce levies on certain products. So if that materializes together with some rerouting of the export orders back to China, that could support job creation and probably support the consumption.
When it comes to trade, Jing Liu, when the exports numbers came out, I think it was a couple of weeks ago, it showed that AI boom. So the worries are the transmission into the consumption side is coming quite slow, quite challenged. How do you see that playing out?
Right. So we still see that China actually excelled in exporting, say, EV cars as well as some of the semiconductor. I think for that, the transmission to consumption may not be as forceful as people would like to see. Probably if we stay monitoring the data for a little bit longer, if there's evidence of certain kind of consumer goods rerouting back to China for the production, that would be more direct support for jobs and essentially the consumption.
What do you make of this AI boom, right? We saw it in the trade data just a week ago about it's everything that's AI related in the supply chain that China seemed to be exporting, importing. How sustainable is that? Because I'm even looking at industrial production numbers, which have been supported by exports. Even that is slowing down now. So was that just kind of front loading, or do you think this sort of trend can continue and drive exports further?
I think basically this is a global AI story. If we believe in AI can eventually boost productivity, I think the AI frenzy will last for a bit longer. Probably the market performance is a different story. I think, some people believe even if there's some more volatility on the market side, the ultimate demand for AI is still there. So I think both U.S. and China are betting on that. And this kind of strong performance on the real economy side will last for a while.
You talked earlier about some of the impacts, the effects that we're seeing from the war. What's been supportive so far has been the stockpiles. And once that's eroded, what do we know about how that might play out in the next couple of months? Is what we're seeing in the data today already a sign of things to come?
Well, I think for the data today, it's pretty much a summary of what happened previously. What's interesting is what's going to happen next. For that, I think the end of April print of the PMI actually tell the story. Basically, it's been a while since we see this more enterprise PMI actually revert back to 50, and the same is true for the medium-sized enterprise. And also, counterintuitively, the sub-index of the export order PMI actually revert to above 50 after almost 2 years. So that tells me probably we will see more support on the SME side, and those are actually quite powerful in creating jobs and supporting the economic growth.
What are you seeing among the youth and the jobless in China at this stage? And does that also figure into your view, the narrative that things are stirring among the smaller firms in China?
Well, I think youth unemployment rate continues to be a challenge in China, as we can see from the data. And also, I think that's a challenge many other economies feel. To some extent, this AI replacement story is happening. And also for China in particular, I think over the past several years, probably we have seen record high level of college graduates. And maybe there's some sort of mismatch of the skills trained in school and skills basically demanded in the market. So I would say that will remain the focus for the policymakers, and probably will continue to see more measures such as creating internships and trying to give more training, etc., playing out.
You mentioned about the Trump-Xi summit. China had a very interesting line in that readout: constructive strategic stability.
Yes.
What does that mean? I know you're really good with rhetoric and really deciphering what China's interests are. Do you think that's been reflected in what it shows with U.S. interests as well?
I do think so, because last year we have seen, mainly 2 rounds of. And after the Busan meeting of 2 presidents, we seem to enter the new period that both sides signal that despite the rivalry in many different fronts, they will continue to work with each other. I think the pragmatism actually matters quite a bit. And in this specific summit, I think China and U.S. definitely send a signal. They are going to seek for relatively stable relationship while working with each other on different fronts.
What are your assumptions on where tariffs going to land? I mean, we still have those 301 investigations that conclude at the end of the summer, and Trump has talked about the threat of raising those tariffs again. I mean, what are your assumptions right now?
So, actually, previously, I thought after the 301 investigation, we will end up with some tariff, more or less on par with what we started with at the beginning of the year, before the IEEPA ruling. However, last Saturday, we see that the Ministry of Finance actually, during the press conference, said something like both sides agreed to reduce levies on certain products. And Secretary Bessent also made the same statement.
Yeah.
Basically, for those U.S. is not looking to reshoring back to reshoring the manufacturing onshore, then there's room for both sides to reduce the tariff. And obviously, China will do the reciprocal cut. So if that's true, I'm going to see maybe a lower tariff.
It's interesting because even without these lower tariffs, we've seen the Chinese economy more resilient than expected to tariffs and the impact of the war. We're expecting a couple of meetings to come later in the year from both sides. If there was one risk that you would highlight, what would it be?
Well, I think a tariff is definitely still the focus, with the aim to normalizing the trade between 2 countries. I think basically last year we have seen the record low in terms of the share of U.S.-China trade as percentage of China's total trade with the rest of the world, below 9%. So there's a lot of room for improvement. But on top of that, the statement regarding Board of Investment also caught my eye. Basically, Secretary Bessent said something like they want to have a pre-game such that the investment into the non-sensitive, non-strategic areas will not get referred to CFIUS. That would be preferred by the business. A lot of certainty in terms of talking about investment potentially into the U.S.
You mentioned about this K-shaped economy. What is the proper policy prescription to fix that? I mean, it seems like policymakers now are wait and see. with really implementing any stimulus. They pulled back on fiscal spending in March. Do you see that they could actually be implementing stimulus after these numbers?
I'm not so sure about that for now. I think overall the stance still seem to be play cautiously, especially we see that the debt issue start to concern many other economies. China definitely want to have a more organic recovery. So actually our base case is no extra stimulus for the economy for the time being, unless there's some surprise turn down the road.
All right, Jing Liu, always great to have you. Jing Liu there, Greater China Chief Economist at HSBC Global Investment Research. I just want to recap, of course, it was, in terms of the data, a miss on multiple fronts here today, and it really just adds to more headwinds into these markets when you take a look at how the rest of the risk assets are doing here, and you are seeing Asia-Pacific lower by about 1%. Kospi, at least, has turned positive. I think the Samsung news and what we're hearing from the labor unions and the company at least have turned that stock a little bit more on the positive side of things. But you're still seeing a pretty deep sell-off here in Tokyo, in Hong Kong. Hang Seng is down about 1.5%. We've been tracking, of course, the Indonesia Open as well. We're down 2.5%. The rupiah also at a record low as those markets reopen. So certainly we're watching FX, given it seems like dollar is reemerging once again as king. And you are seeing that across not just EMFX, but even when it comes to the yen, right? 158, 159 levels now. We're getting closer to the last time they intervened. Even renminbi has weakened too. And you look at bonds, that is really where the source of pain starts. When you're talking about the 30-year yields or even the 10-year that continues to see a melt up, 462 for your U.S. 10-year. The Japanese 30-year yield is at levels that we haven't seen since 1999, Avril.
Yeah, inflation worries really playing out across markets. And of course, we are watching for the impact that has perhaps on the AI-related rally, how it's lost momentum. So still ahead, AI will continue being in focus. Baidu set to release quarterly earnings today. We'll look at why the Chinese tech giant may suffer its largest first quarter profit dip in 7 years. This is Bloomberg. All right, continuing to track how the spike in yields and the concerns about inflation are playing out across global debt markets. Certainly Japan and the US have been in focus. You're also seeing a bit of pressure on the 30 yield in China, which is interesting given the numbers that we got out of the Asian giant just at the top of this hour. It doesn't look like reflation is stirring. Take a look at the rest of the Asia Pacific as well in terms of stocks on a day where the South Korean benchmark is continuing to manage some performance. It's really erased the declines from the start of the session on a day where, of course, the AI rally seems to be bogged down a little with these higher yields. Our Asia equities managing editor Lian Ting too is here. Lian Ting, I mean, what do you make of these yields now coming to the fore for stocks after they resisted that pressure for so long?
Exactly. So right now you're seeing the really two obvious forces playing out in the market right now. One is a continued bullish case for AI stocks. The other is the worries about bond yields, about higher inflation, about oil prices. We did a survey with 32 investment managers globally last week, and it turned out they're still very much bullish on this AI case, AI bullish case. 80% of the poll folks that we spoke to believe that equities will outperform any other asset classes in the next 3 to 6 months. But when it comes to risk factor, the biggest risk, guess what? They're talking about bond yields. A lot of them are pointing out if the 30-year Treasury yields stay consistently above 5%, they're going to expect that to knock off the AI trade off the course. And today, as you just reported, that the U.S. Treasury 30-year yield is at 5.15%. So I think overall the narrative will be probably leaning towards a bit cautious side in the near term.
So against this backdrop, do investors see this selling as a buy opportunity, if at all?
So a lot of people are actually playing in the derivatives market right now because it is really hard to call whether the AI trade will actually resurface as a winning trade in the backdrop of higher bond yields. So some of them are piling into the so-called exotic options trade called look-back puts. Those are the type of put options that can reset at higher levels when the market rallies. These are a little bit more expensive, but they outperform the plain vanilla put options in the environment where market rallies before it actually plunges. Another options trade people are looking at, regardless of where the cash market is going to go, is the so-called dispersion trade, which is betting on the high volatility on single name stocks instead of on index level, because volatility on index level may not be high, but because of the very concentrated sort of trade in some of the chip names, the single name volatility will very much likely to stay very high for a long time. So that trade will pay off regardless where the market goes.
That's super interesting how traders are finding new ways into this trade. Lian Ting, thank you so much. Our Bloomberg Managing Editor, Lian Ting, too. Now, we're also watching out for what's to come this week. We have those Baidu earnings later today. In terms of the big one that, of course, has become a macro event for investors, it's NVIDIA. We get that in the middle of the week. And, of course, some Fed minutes as well to contend with. This was the last one from Jay Powell. And interesting how, despite Walsh taking over the helm, you are seeing markets still pricing in not rate cuts. We're talking about rate hikes now. And of course, following on from producer inflation that was already hot out of Japan last week, CPI, at the end of the week. So a couple of things on the table this week. Yvonne?
Yeah, it'd be interesting to see those Fed minutes, whether we see any sort of dissents and really what they're looking at, what in terms of what they do with inflation, right? Because Kevin Walsh, largely seen as in some ways, I don't know, maybe he has been talking about in favor of rate cuts. Can he still deliver that in the face of this rising inflation fears out there? Baidu also set to report its largest first quarter profit dip since 2019 today as it faces pressure from price wars, weak consumer sentiment, and oversupply. Bloomberg Intelligence maintains that the company's AI prospects remain overhyped. Let's bring in Robert Lee, our senior analyst. He joins us now. Okay, it looks like another set of weak earnings for Baidu. Do you see an inflection point anytime soon?
Well, I guess the sell side has been trying to call that for the best part of 2 years.
Yeah.
And just to quote a number from the terminal, if you look at consensus estimates, they've been downgraded by 52% relating to the year 2027 since March last year. So in no way am I trying to criticize former colleagues on the sell side. It's not an easy job. But this sort of jam tomorrow argument has been the playbook for the last 2 years, and it's just not coming through in the numbers. There are some parallels between Baidu and Alibaba in that their core business is under immense pressure. So the majority of the earnings downgrades relate to that. At the same time, their AI investment spend is going up, and the rate of incremental gains on the pure AI business are certainly not high enough to offset the pressure on the core business. So to answer your question, no, not really. I think the pressure, unfortunately for them, their core advertising business, which is related to search ads, because Baidu is often referred to as the Google of China, that will continue for the foreseeable future, I'm afraid.
Everyone's been talking about what's the next catalyst for HSBC, and I think people talked about DeepSeek, right? This new V4 model, there's actually interesting, really. They're the first frontier-class Chinese AI model to break a reliance on Western hardware, ranked 11th globally by LiveBench. What do you think of that?
Well, I guess they're delivering on, to use a UK expression, it does exactly what it says on the tin. They're looking for frontier model level performance, but with a real focus on cost down and cost efficiency. So this is without doubt one of the most cost efficient models out there in the market at the moment. That's reflected in their extremely low API pricing, which is around an 80% approximately discount to the Western peers. And they can afford to offer those big discounts because it is a very, very cost-efficient model. There's a real focus on cost optimization. So whilst the performance may be slightly outside the top 10, I mean, 11 is still not bad, you're getting solid performance at a very low price. And really, that defines China's push globally in AI to lead on low-cost implementation, again, as defined by the government strategy to try and accelerate the proliferation of AI across the entire economy, to look to export markets later with a focus on low cost.
This week is all about NVIDIA. It seems like Jensen Huang returned from China here a little bit empty-handed. But earnings are coming up. Is that going to be a catalyst?
Well, going back to your sort of prelude and talk about the risk appetite or lack of risk appetite in markets, given the backdrop of rising yields, I think that will determine everything. So whilst the headline numbers for NVIDIA should be solid, I mean, this is what we normally say, you could almost pre-record this and play it again next quarter. They will be solid numbers, but to what extent is that anticipated by the market? Can they incrementally outperform market expectations? As time goes on, that's harder and harder to do. And with the backdrop of increasing risk aversion, with increasing rates, then the risk is, we get solid numbers, no better than expected, and with the risk that we see profit taking on the back of it.
Yep. That $6 trillion market cap, we'll see if that eases or actually flames the bubble concerns that are out there. Robert Lee, thank you, our Bloomberg Intelligence senior analyst, joining us on what to expect from Baidu and NVIDIA all this week. We got plenty more to come. This is Bloomberg.
Here are some of the stories we're following. Standard Chartered says it has appointed Manus Costello as its next chief financial officer. This ends a months-long search to replace Diego Giorgi, who left the bank in February to join Apollo Global Management. The bank says this week it'll unveil an updated set of financial targets at an investor event in Hong Kong. Another key appointment is Tanush Kapilaswamy, who took charge as the group's chief operating officer. Chinese internet marketing service provider Deep Zero is aiming to raise 503 million Hong Kong dollars through its IPO in the city. An exchange filing shows it set a price range of up to 55 Hong Kong dollars 50 cents a share. Trading set to begin on May 27th. Yvonne?
All right, we're taking a look when it comes to markets, and the chip space is looking much brighter here this morning. Look at Samsung Electronics here. The last couple hours or so, we did get a little bit more update about, the labor union, as well as the company here is looking to, of course, continue on with these talks here today. And according to local reports, the court partially accepts Samsung's injunction request. So things looking a little bit more positive on the Samsung side of things. That's lifting SK Hynix and some of the chip space here across the region, with Hua Hong Semi also up some 3.5%. HSBC, though, continue to see some pain here this morning, and we're watching Kioxia as well when it came to their earnings. The guidance actually did beat estimates here, but we're not seeing that much movement here right now. We got plenty more to come. This is Bloomberg.
It's 11:29 a.m. in Tokyo. Japanese markets going on a break in a minute. Of course, it's really been the backdrop of the surge in yields, particularly in the long end. For the 30-year, you're looking at the highest we've seen it in Japan since the debut in 1999. On the 10-year, also not really spared, and at a time where the suspected intervention from Japanese authorities. Look at how those gains that we saw a couple of weeks back on the yen has just been eroded. You're looking at dollar yen moving towards that 159 handle at a time where investor concerns are really front and center on oil prices, on inflation, on whether the Strait gets reopened. Yvonne?
Yeah, and in Asia, certainly that's where all that energy sort of crisis remains, right? When you take a look at what Japan, we have reports talking about how they might have to spend more in this extra budget here as they deal with this Middle East crisis. And that's probably why you're seeing long end yields, not just in the JGB market, but really regionally and globally, are heading higher here. So certainly there's the concerns that it's not just the oil hit, it's not just the inflation hit, but there also is this AI boom that is leading to a lot of supercharged economies here as well. That could actually lead to maybe higher yields, more inflation, and maybe potentially more rate hikes from central banks across the region, Avril.
Yeah, Yvonne, there's a lot of red on the board today. Let's get more with Brian McCappin, APEC Deputy Head of Global Markets at BNP Paribas. He joins us from the bank's Global Electric Vehicle and Mobility Conference in Hong Kong. So, Brian, we want to talk a bit about how perhaps as investors look for other ways into frontier technology, it's not just about AI, it's about robotics as well, which I'm sure you have a lot to say on. But talk to us about this macro backdrop when inflation seems to be really hitting stocks, even in Asia, perhaps not so much for South Korea today. Do you see more to come on that front in terms of the risks?
Hey, Avril. Thanks for having me on. Certainly, yes. Behind me is our ongoing EV and mobility conference. We'll come back to that. Sure, the backdrop around the world is focused on inflation. Clients are very focused on inflation and fiscal challenges as a secondary concern. And yes, you can see that playing out here in Asia. It's a different story, though, in some regards, I think, across Asia, where particularly in China, some of that inflationary concern is a little less negative than it is perhaps in other parts of the world. So I agree. We're certainly seeing, for example, following the CPI numbers in New York last week, we saw bond yields slipping further wider. Also in Japan, as you've highlighted, I think there's less pressure in region, and I think certainly as we look towards China, a little less pressure than we might expect in other parts of the world.
Do you think that, expectations for hotter inflation are sort of taking hold right now, Brian? I'm just wondering, this higher yields, are we at this new range that's here to stay? Or do you think that, what we're seeing in inflation is still short-lived and we can get by once the Strait of Hormuz reopens?
It's hard to imagine that inflationary pressures are going to be short-lived anywhere. Obviously, the longer the closure persists in the Middle East, those inflationary pressures are going to persist. And as you've mentioned, they're having an impact on global markets. They're having an impact here in region. And I would imagine that we're going to be talking about inflationary pressures, pressure on regional currencies, pressures on various market bond yields. I think that we're going to be talking about them for some time. It's tough to say how long the current impasse will last in the Middle East, but for sure, as long as that's looking less likely to resolve than more, we're going to be talking about inflation and the pressure on bond yields, no question.
Brian, it's coming at a time where investors are banking on this structural shift in stock markets via AI trades. And as we were alluding to a short while ago, they're looking to broaden out in terms of, say, EVs as well, on robotics, frontier technologies. Is there a read-through from inflation for those sectors, or do you think the structural trends will overtake?
Avril, I'm not going to necessarily talk about the longer-term structural trends specifically, but I am going to tell you that behind me we've 400 investors, many of whom come from the region, but just as many have come from outside the region, traveled here to talk about the EV, mobility, robotics, sustainable energy sector. That's the business that we're talking to behind us, and clearly clients are interested in that space. They're clearly looking to invest in that space. And if you think about it, an energy crisis, or at least an energy impasse such as we see persisting in Hormuz, is the perfect backdrop for clients to come and learn a little bit more about alternative energy sources and alternative renewables. And that's at a time when obviously that's more important. It's also true that this part of the world, and certainly China, not just China, but this part of the world, is a recognized provider at the cutting edge of these technologies. So I don't think it's a surprise that clients would be joining us here today. I don't think it's a surprise that investors are interested in hearing more about that story at a time when the traditional energy sector looks very, very challenged. So if that's an indication of the sort of appetite for structural change that you reference, I think the turnout that we have today and the topics that we're discussing on the main stage, they seem to be very, very front and center for our clients' minds.
Brian, we've talked about foreign investors have started to sell out, or at least net selling, when it comes to markets like Taiwan, like Korea, some of these hardware sort of names within the AI space. How are investors that you're talking to, how are they repositioning around not just this AI revolution, but also around the whole renewable space now?
Clients are interested to add, and the interest that we're seeing here today is on the buy side of that equation. I think the region is very strong in offering investment opportunities in that space. Again, particularly China, but not only. And again, the backdrop of the current situation in the Middle East seems to be providing an accelerant to clients that are interested. The market here in Hong Kong has offered clients an opportunity to invest in those names. Very recently, we've seen a deal from SIG Energy, as you would know, that performed very, very well. The debt capital market pipeline seems to be very robust here in the region, and there's a lot of opportunity, I think, for clients to look at acquiring further in that space. It seems to be quite robust. The interest seems to be pretty high.
On that front, you've just outlined some of the outlook for ECM. Is there a particular part of the EV supply chain that you think investors, or you're advising investors to focus a bit more on?
Well, we're here talking about the whole spectrum, and our agenda's covering everything from batteries to OEMs to the components and even the robotics element of that landscape. We've robots wandering around behind me shaking hands with clients, and it's incredible how fast the agility of those robotics has come on in the last few years. So the whole sector seems to be benefiting from the backdrop in the Middle East, to be honest. And it's also true that China, as a market, offers, I think, a lot of diversification. So clients can look at the market through China and really find diversification that isn't necessarily always available in every other part of the region. So I do think there's a recognition that the market is deep there. There's an opportunity for true diversification, and you can look at any of those sectors that you're interested in and find a way to play that whole segment.
What about when it comes to debt capital markets, especially given what we're seeing in the bond markets? Is that the same or similar assessment that you have on the trajectory?
I think the debt capital market proposition in Asia is relatively stable when compared to the rest of the world. So although you highlight slipping yields, and although you highlight the inflationary consequence on some of the larger bond markets, and sure, we've seen some volatility in region. But again, if you take the Chinese market here in region, it's relatively resilient, and policy is relatively well understood and clear. And so I would suggest the volatility is a little less of a concern to investors than you're seeing in other parts of the world. So when you think of the investment needs that companies clearly have in the region, and you marry that with what we're seeing behind us, which is clients coming into the region to look for opportunities to invest, I think you've got a stable value proposition that companies are going to take advantage of and investors are going to look to participate in. So it feels relatively robust, I think, compared to other parts of the world.
Brian, we got to leave it there, but thanks so much for the time. Brian McCappin there of BNP Paribas. I hope you guys have a good rest of the conference there. And yeah, help us shake one of those robots' hands for us, too. Speaking of robots, Robotphoenix shares soaring on their trading debut today in Hong Kong. We have the chairman, Zhang joining us exclusively next to talk about the company's post-IPO plans. This is Bloomberg. All right, we are taking a look at one listing debut here today. It's Robotphoenix. There you go, 83% gains here the first day of trade. And certainly they are also really interested in really what their plans are going to be overseas markets, production numbers and the like. Certainly going to be a big one here. And a big theme that we've been seeing globally here, where robotics seem to be still that very hot trade when it comes to AI and the like. So yes, it's broadening beyond just the region's chip makers here. Here to tell us a bit more exclusively is the company's chairman, Zhang. Zhang, thank you so much for joining us. I know you just came from the exchange.
Yes.
Are you surprised by this sort of turnout here?
Yes, yes. For me, it is a great surprise. I didn't expect that it can go this much. But I know people. We have gained over subscription. Yes. So I think it's also beyond my wildest expectations. Yes.
Tell us a bit more about the business model. Where do things stand right now? I mean, in terms of the real world use of your robots, can you tell us a bit more about what the industrial automation world looks like for you now?
Yes, I think the China, 14 years ago, when I just started my company, the China robotic players only account for 3% of the market share domestically. So at that trend, our robot companies highly depended on the performance of our downstream customers. If they have a high demand, and we can go better. So at that time, the automation lines for car industries, it dominated the market. So at that time, we have the big four houses. That is ABB, Fanuc, Yaskawa, and Kuka. And they are specialized in the car industries. But nowadays, especially consumer electronics dominate the market. So this gives us a chance to come up with the competitors. And because the requirement for the different industries is quite different. Yeah. So we built more smarter, more faster, more lighter, and with higher precision robots to use for the consumer electronics. So that's why we can come up with the foreign competitors and gain a market share.
Hey, on the note on foreign competitors, what's the international strategy, especially given some of these geopolitical concerns in the backdrop?
Yeah, basically we have two main strategies to go into the international market. The first one is to follow our big customers, because we have some already existing customers in China, like the Lens, Gore-Tex, or Foxconn, this kind of customers. And they also have factories overseas. And normally when they expand their foreign factories, they will recruit their existing suppliers to help them to build the automatic lines. And the second one is to hire some distributors in different countries. We already have 7 existing distributors all across Southeast Asia, Europe, North America, Australia, etc. So, and we will, use our 10% our net proceeds to expand our network overseas. So, which will help us to, sell more robots into our foreign customers.
One of our guests earlier highlighted Malaysia, Thailand when they look at Southeast Asia as markets. I wonder, what is your sense of which pockets in these markets have most potential for your business to grow?
Yes, we have already have many, customers in Vietnam, Thailand, Singapore, Malaysia, this kind of, and also Indonesia, this kind of Southeast countries. And normally, our robots is helping the consumer electronics lines and also the food and beverage lines and also some daily chemicals lines. And we have just launched an automatic warehouse in Malaysia, which works very good. And I think since the Southeast is also the market of Southeast Asia is also booming, and which gave us a better chance to help them, directly get into the automatic line and escape the human labors.
Yeah. Tell us a bit more about the supply chain. I mean, how dependent do you think is China's robotics industry to U.S. technology components, for example, when it comes to like sensors, software tools, and the like?
I always think, the U.S. Talents have some gift to, invent some, brand new things. For example, start from this, big data and VLA, and they started in Silicon Valley. But our Chinese people also have the talents to scale it up, right? So we can follow the trend and make our own techniques.
Yeah.
So
how much of your supply chain is now domestically based?
We can do 100 domestically based.
You can. Okay.
Yes.
Wow. In terms of just overall the competitive landscape, right? There's so many robotics companies coming through here.
Yeah.
I mean, there's obviously the humanoid space as well, but everyone's talking about hundreds of these sort of companies that are emerging in China. Do you think it's a bit too crowded?
I think it's a normal pattern. And you can see in other industries this happens a lot, right? But time after time, there will be some dominant players, and there will be some merge and acquires, and also, and I think maybe in 5 or 10 years' time, there will be some big players like the past 4 big houses existing in China, and we are a company focused on in the light industry, and we are an all-inclusive robot body and solutions suppliers. And I think we are on the right track and on the right path. Maybe we hope we can become one of the big players in here.
What about the path to profitability? What does that look like for your business?
Yes, and we have some very crystal clear paths to the profitabilities. The first one is to increase the sales ratio of our robot bodies because we have many kinds of robot bodies, and the gross profit margin for the robot bodies is better than the solutions, and since we can sell more amount of our robot bodies, and we can benefit from the economy of scales, and also can improve our. And we can also build our automatic lines, which is use our robots to build our robots. And the second one is to increase the high-tech products. For example, our semiconductor products is one of the example. We have launched a whole series of our wafer handling robots, and all have the TUV certificate of S2 certificate, and they have a better profit margin. And the third one is to go deeper into the foreign market and to help the overseas countries to improve their automatic level, and which can give us a brand new market.
You talked earlier about how your supply chain can almost be 100% domestic. I wonder how much are you expecting your export numbers to account for the business, say, 2-3 years from now? What's the ratio going to be like? Last year, 10% of our revenues is acquired from the foreign customers, and we will increase the number this year. Maybe, let me guess, maybe increase by 1 or 2%, maybe to our 12% of our revenues this year will be coming from our overseas customers. Would you look into humanoid robots? Yes, of course. You're interested? Yes, we have launched our humanoid robots last year, and we gave it a name called Jing. Yeah, it's a
whole new Jing, right?
Whole new Jing, I love it.
Yes, a whole Jing. And our humanoid robots can work side by side with our traditional industrial robots. Because our industrial robots can do the fast and precise and rigid things, but we also need some versatiles and flexibilities, and which and for this part, humanoid can add a better value for this part because they can learn, right? They can only maybe listening to an oral instructions or maybe just mimic the performance of the human beings.
Yeah,
and can do it by it all. Yeah.
All right, using robots to build robots. I love it. Zhang Sai, thank you so much for joining us here. Zhang Sai, they're chairman of Robotphoenix Intelligent Technology. They're just listing today in Hong Kong. Of course, you can rewatch that on the Bloomberg Video Hub. You can check it out at bloomberg.com/videos. This is Bloomberg. I want to recap that data dump that we got from China here. The April activity numbers there were a bit on the softer side of things. So retail sales was only 0.2% there. In terms of industrial production, that also weakened to about 4.1% growth. So as we talked to HSBC's Zhang Liu, there is a bit of that Iran war impact that could be showing in some of these numbers here as well. But we'll see, right, if this actually marks some sort of start of the trend. But too early to tell. But right now, you're taking a look at when it comes to risk assets here today, and it continues to be dollar reigning high here, with the rest of EMFX seeing quite a bit of weakness there. The rupiah is at record lows. Dollar China is also weakening here at 682 levels here. HSI also lower by 1.5%. That's it for us here at the China Show.